What's going on, traders? Hope everybody's having a great Labor Day weekend. My name is Shark. Thank you so much for joining me on this week's edition of the Futures Market Analysis. We're going to be going over the E-mini S&P futures as well as the NASDAQ 100 NQ, some top-down analysis. Also going to be taking a look at this week's economic calendar as well as some other ancillary data points that I like to use to help formulate a game plan for the upcoming trading week ahead. Thank you so much for joining me. If this is your first time joining the video, don't forget to subscribe and turn on the notifications. It means a lot to me, and it is totally free to support the channel in that way. And again, it just means the world to me for the newcomers and the faithful listeners here each and every week. All right, well, just a reminder that all the information here that you see on this week's video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. All right, so with that out of the way, new month, September, kicking off here, and we are going to take a look at the economic calendar for this week. It should be pretty quiet. Let's see what we have here for this week. Now, let's see here. Tuesday, the 2nd, ISM manufacturing coming in at 10 o'clock. Nothing really too crazy there. We do have Kashkari speaking at 1:30. Haven't seen him around in a while, so that'll be interesting. Fed Beige Book coming out at 2 o'clock on Wednesday. Thursday, initial jobless claims coming in at 8:30. Pay attention to that. U.S. services PMI at 9:45 and ISM services coming in as well. So I'll be watching that in addition to John Williams speaking at 12 o'clock, right around the lunchtime. Okay, but Friday, some interesting data coming out then for non-farm payroll at 8:30. So I think all eyes are really going to be right there for that big event. So I think that's really going to be what is the most important thing for this upcoming week. All right, the other thing I wanted to go over as we roll into September is the seasonality. Now, of course, this is just, this doesn't mean to go ahead and short the market to hell, but just something that we want to pay attention to here. If we pull up a seasonality chart, usually September here has a bit of a downturn in the markets, and that's fine. We've been over the longer term charts. They can certainly withstand some selling pressure, but just something I wanted to point out for everybody right here, that September usually is a weaker month overall within the yearly cycle of the market. So just something to be aware of. Again, we don't just short the market because of this one data point, but hey, it's just something interesting to look at and be cognizant of. All right, so with that being said, let's get into some analysis here. And we do have a new month, as mentioned before. We can take a look at the monthly high and low for the month of August. And really, overall, we haven't gone anywhere. And let me zoom in overall. Now, we've had a couple of explosive months. You can see by the size of the candles here. From back in, starting in May and June. And now we're starting to see the size of those candles on the monthly chart here start to slow down and start to be a little bit smaller. We did make a new all-time high last month, but really it was a marginal higher high. I mean, the high from July was 64.68, and we got 65.23 for the new all-time high. So just a very marginal higher high there when we're looking at it from the lens of the monthly chart. And I think it'd be worth noting here, as long as we stay, certainly the most bullish thing, stay above the monthly high from July, I think that would be a strong sign. We're basically sitting on it right now, that monthly high from back in July, 64.70 half, so basically 64.70 there. We would want to see overall hold, but like I was mentioning before, we have no issue if the market does pull back structurally from the weekly standpoint, and certainly the monthly. It's not really too much of an issue here. We can afford a weekly higher low being put in, or a monthly higher low for that matter. Okay, so right now future market are open and we are pretty much flat. Yes, sitting basically up about just under 4 points, or excuse me, 4.5 points as it stands. So I don't expect obviously much moves here in Globex during the Labor Day, but that's interesting nonetheless. All right, so let's go over here. The monthly chart, I definitely would be marking off the previous month's highs and lows. That's 65.23, and the previous month's low, which is going to be 62.39 half. So an interesting range there. Definitely some stuff to play with, but so we have that area marked off. I think that would be important just to have noted. Certainly if we start to change some directions from the bigger picture on either side. But that being said, the Bears tried to push us down, break us under the monthly lows of the June session, the July session, but really were unable to make it. Really, we made a higher low right there versus this very, very small low. So very, very minuscule higher low, but a higher low nonetheless, and that higher high, although again very marginal being put in. All right, let's get into the weekly chart here and see what we can take away from that. Also, just want to mention we're not seeing really those super overbought levels. Shark Momo right now giving us a 10.80, so not really too crazy, but definitely in that overbought reading on the monthly as well, so that is worth mentioning. I know in the last video we were also looking at it on the weekly, and it is turning down just a little bit right now in our readings here, down a little bit in the momentum from the Friday sell off, quote unquote. What are we at? 12 point, basically 12 right now, reading overbought. And I think I saw something on Friday. I was kind of disconnected from the markets, but saw something on Friday saying that one of the courts ruled that the tariffs are unconstitutional, or Trump's not allowed to do them, something to that effect. So we're going to see how that's going to play out. Even if that is going to end up being the case, I think I read that they would still be in effect until at least October. So, but we'll see what happens here. All right, we have our monthly range marked out here, and as you can see, when we can break down into the weekly, really not too much difference, or we're really defining the balance there. And overall, what do we say on the weekly chart, right? We could even come down right to the highs from back, where is this, the beginning of the year, this is the end of January, this is the start of February, this is mid-February, and this is last year right in the Christmas time period. But like I was mentioning, structurally speaking, this balance range here, right, are the highs in the break of structure that really would need to be broken, and there's no issue of us coming down. So even if we broke the lows from the week of July 28th or the start of August on the 4th, you still have some room down there, and we went over this last week, for that critical support and that big break of structure. And it can put another area right here. Again, I don't want to be too repetitive over last week's video, but it's the same thing right around that 61.70. Really, there's no issue there with the markets pulling back into that area, and potentially being able to catch a bid. And what I want to be, for a swing trade perspective, would I want to be long in this area? No, definitely, of course not. I'd rather wait for a little bit better pricing, if not already long, and trying to see if we could come in and bring into that weekly higher low being put in here. So, like I said, we did go over that last week, and that's all fine and good. Pivot here that we can watch on the weekly, though, the lows from the week of the 18th, I think is worth mentioning. So we can have that out here, about equilibrium on the balance that we have. So underneath 63.55, I have 56 here, but we'll just call it 63.55. Okay, then we could potentially look on that weekly time frame to come down and retest the lower parts of the range and down like so in here, and maybe we, maybe then we see some reactions from the buyers that are waiting for a better trade location. If that does not actually end up happening, if we stay above that 63.55 area, if we hang out up here like so, we're going to consider this bullish consolidation and wait for that push up and above and a retest, and then we'll see you back at 6,600 and beyond, and certainly higher if we are able to maintain that previous high breakout there. And then again we go into no man's territory, no man's land, and just into pure price discovery mode. So from the weekly perspective, in my opinion, up and over that 65.25, I'm going to bring that a little bit higher because we missed it. There we go, that's fine. Actually, let me fix it. All right, there we go. Up and over 65.25 and hold. We'll see you at 6,600 and beyond. Under that 63.55, we can start talking about a little bit stronger retracement to the downside, and then look at that potential weekly higher low being put in, and then get a real nice trade location around that 6,200 would be what I would be looking for at that point. Okay, so let's go into the daily chart. I don't think that there's going to be too much more to go over on the daily, but let's take a look. All right, zoom in because I want to capture some of this price. Okay, yeah, so there you have it. Pretty much the same. The lows from the 22nd of August. You can see it had a bit of a double bottom in that area, and also a little bit of a couple of days of balance here, also showing that nice area where we would want to be paying attention to a potential pivot breakdown. Same thing, you can see what happens here. When we broke, we did test that lower part of the range and just came back into these highs once again. So paying attention there for sure. All right, so yeah, really not too much else to go over on the daily chart here. I will say that even if we broke 6,200 and came and started to break 61.60, you still have this area. Well, I could go a little bit higher there. You still have another area pretty much of balance, more or less, in this general zone. So even then, there's still the opportunity for bulls to come in if we sold down under that 61.65. 60.77 looks interesting to me, and a 61.15 also looks pretty interesting to me as well. And if I was just to extend this here, we also have some price reactions there as well. So this area is also very interesting, very close to the 6,000 mark, 60 12 60-20 area right there. So even if we broke down, it would not be crazy in my opinion to want to try again for an even better trade location. But as I mentioned, if we break under that 61.65, yes, we should see a little bit more downside, and that's fine still. We can even deal with the monthly higher low being put in, although I don't think we will see anything that drastic. The market has just been incredibly strong overall. All right, let's get down to a little bit more granular and take a look at some day trading levels for this week that I am watching. Okay. All right, so what do I need to see here? What would I have needed to see? This looks like it's a little off. That's fine. Okay. So what would I need to see here from the bulls? We need up and over 64.83. If you want to be even safer, 64.85. You know, I hate those small numbers. I like to go by the 5s and 10s. Either way, 64.85 we'll call it. Up and over. Need some acceptance. Up and over. Then we can look at 6,500 again. Basically right here into this area. Watch out for sellers to try to fight in that whole number area of potential resistance. But if we find some acceptance over the 6,500, okay, then we're looking good. Next logical point would be trying to get as high into these equal highs again at the all-time high. 65.20s might get stuffed a little bit short of that. 65.15, 65.17. It could have some issues. You can see here where we started to change a little bit of the direction there. So I would watch out as we get into these highs. But all things being equal, 65.17, 65.20, 23, that's the all-time high. Just in that area would be the next zone I would be watching. We find some acceptance, and then we go ahead and search for that equal high. As it stands right now, markets opened up, as I mentioned, and unable to really get over that 64.82, 64.85 area. But still, we're just trapped right here. Nothing really overall real too concerning unless we start getting over getting under 64.71. Okay, then we can start talking about a little bit more downside, another 10 points lower, matching the lows from, it looks like, the Monday session. And pretty much, we have a bunch of areas right here where we've seen some reactions in the market. Let's just pull up here and right here as well. So under 64.70, you can get another about 10 points, or you can trade up against that 82 right now, which isn't really that bad of risk to reward considering we're trading at 64.77, risking 4 points or whatever, and then trying to see if we can come down into 64.70 and seeing about that break, and then looking, maybe taking some off, adding back here, and then looking to come down into these equal lows. Under 64.60 though, that's when things get a little bit more interesting, potentially coming down from into 64.52. We could do a little pit stop here. You can see right here we did have a little line, right? Okay, boom, right, and you can see these highs right here, and that's actually pretty interesting to me. So do you know what I'm going to do? Actually, just going to mark that off so I have it there, because we might end up just coming down about 5 points lower and then coming into that 64.55 area and then finding a bid there. But under the 64.55, okay, I'll see another 10 or 8 points lower. 64.42 would be the next spot I think we would head down. So as I mentioned before, kind of, we look something to this effect, and then maybe we come back up, retest and break, and that would be the short side. And again, the long side, maybe we reject, maybe we hold right here, let's just say. From there, break up over, find that acceptance, and boom, those are your two paths as I see it. For ES, I would just be careful because we could get stuck right here, not making a higher high or a lower low. And even then, even if we broke under the 64.70, it's not really a lower low. We would have to break these equal lows for it to be a true lower low. But we could even just get stuck in this zone. So just be careful of that overall. All right, let's move on to NQ and see what we can take away from the nesty NASDAQ. Everybody's favorite whipsaw. All right, let's take a look at the monthly chart. All right. Interesting, different candle here, a little bit less certainty and strength. We've talked a little bit about the divergence in the tech sector. RSPs really broadening out. Financials have been doing well, holding up the E-mini S&P futures, but tech semiconductors have not looked the best recently, with NVIDIA having a little bit of a disappointment in their earnings, at least according to what the street wanted to see. But that being said, you can really see the difference in the last monthly candle compared to ES here. Pretty much a doji, just really unable to, we did make a slight marginal higher high. Yes, we did, but the candle close is definitely not as convincing. Either way, same thing here. Going to mark off the previous month's high and low. Good to have that information. Okay, so I think really that's the main takeaway here between ES and NQ. And this looks a little bit lower. Okay. Let's look at the weekly chart now. Same thing, a bit of a divergence here with the Shark Momo cooling off a little bit. You can see the reading is a little bit lower than what it was on ES. Want to also watch to see if we have a little bit of the sell side curve kind of take over here, a little bit of a rounded type scenario. That could be also taking place, so that is interesting to note. But overall, trend up here and starting to get a little bit of that divergence down. Okay, so same situation, at least structurally, and we went over this last week as well. For NQ, we still have this area right here, which we can sell all the way down to this previous balance high. We could all sell down to, and still really overall just structurally retesting this area and putting in a weekly higher low. So we do have a defined range here where we could see a little bit more downside under 22,760, we're going to call it, but the structurally you still have this big area right here that it can go down to and totally be fine and give a better trade location if you are not already long. But if we did see prices come down into this area, it might be a time also to add if you had been able to buy, and say in these areas here during the tariff tantrum time period back in April and at the end of March. So let's see, but like I said, everything all being equal here, as long as we hold over 22,760, 750, really no concern. As long as we're holding 22,200, really no concern for me. But this certainly is a decent range to be able to trade either way from that weekly perspective. If I had to put a pivot on the weekly chart here, we're going to do right about this area here, the weekly lows from the 25th. I want to pay attention to. We opened up just a little bit on it with the weekly lows here from the week of the 25th, 23,370. Okay, so that's what I am watching, 23,370, and the highs from July 14th, which look a little bit lower. So I'm going to say 23,330, 23,325. Start to get underneath, right? Look for sells here on the bigger picture. It's possible swings down to the lower part of the range. Whether or not we see a reaction there, I don't know. But if we do break underneath, maybe what ends up happening is we see a reaction. We come up, double top, and then we make the lower low under that 22,760, and then we sell down to the 22,200s and see about this big area of potential support, as you can see right here. Whoops. Right here. Right. I mean, this is all in that area. Then maybe we have the springboard from there back up to the highs. Right? Okay, but if we hold over equilibrium here at the 23,330, hold that. We'll just consider it bullish consolidation. Look for that break of the 2470, we'll call it. And then if that breaks, I mean 24,500, probably pretty easy. 25,000 probably would be the next big area, at least from the weekly perspective. Right, so there you have it. Let's take a look at the date. Daily chart. Below the 9 and 20 here. Interesting. 9 and 20 on the daily. EMA right now is hitting 23,544 and 23,514, excuse me. So just slightly under the 9 and 20 here. Not too crazy, but we are starting to get below the zero line on the Momo here. So that could be definitely something worth watching. I would say from the daily perspective, if we start seeing again those closes, and we don't have it marked off here because we were doing some weekly analysis, but if we start to see this break right underneath this pivot, I would probably be looking 23, 25, pretty much trying to get that 23 even. Probably come down and retest the lows from August 20th, August 21st in this general area. I would say from the daily chart perspective, looking for something like that if we do get a break, right? And certainly if we break the lows from the August 20th, the next big area, it's going to be that next matching low right there. So we'll see if we stay below the daily 9 and 20. That is definitely interesting. Let's get some day trading levels going. I don't know why this looks like this. It shouldn't. Didn't look like that when I did it before. I do apologize. All right. So sorry about that. Okay. Why is this? This is not right. I did it on here, didn't I? Oh, my apologies. Where the hell is it? Okay. Well, this is not right. I'm not sure. Okay, I'm not sure exactly where this went. Okay. All right. Okay, guys. Yeah, I'm sorry. These aren't the right levels that I really wanted to do here. I'll just post them on Twitter. I'll leave a link in the description. I don't know why it didn't save. All right. No problem. All right, let's move along and take a look at some of the ancillary data that I like to look at here for the overall broader macro themes here. Taking a look at ADD and VOLD on the Friday session. Despite the sell-off, a little bit positive here. We're reading on the VOLD here, which is interesting. And but the ADD could not get over the zero line, so we will see about that. But a little bit stronger than I would think. Mixed bag as far as the sectors on the Friday session. Half about green and half about red. So considering the pullback that we had, although it wasn't super, wasn't a 3% down day, but the internals, at least on the Friday session, not looking too shabby, at least on the side of the S&P 500, the E-minis. Okay, let's look at VIX really quickly. Put call ratio, not seeing any contrarian signals there. But we did close here on the VIX a little bit above that 1570 area, so that is interesting right now. We had a low down by the 14s, but couldn't really get lower than that. Holding over 15 and 1575, 1570. All right, we can start talking about a little bit of higher volatility coming back in. All things being equal right here, if I was just trading, probably see about 1730 and see what happens with the VIX at that point. But over 1730, 18s and 19s back on the table. But hold hold that 1570. All right, looking pretty decent right there for some potential volatility coming back into the mix. All right, so nothing, as I mentioned before, on the put call ratio that stands out to me as too interesting. All right, let's keep moving along here. And we'll take a quick look at the yield curve. I don't think anything's changed. Nope, still going up. Nothing really here on the one-day VIX. Still would need over 15 for me to be interested in even more volatility. But, well, we are holding that complacency zone and it's kind of drifting up a little bit there. So that is worth noting, but nothing too concerning there. I would say VIX up and over its 1575 is a little bit more interesting. Nothing really here. We're still over the 50% ratio on how many companies in the S&P are trading over their 50-period moving average. So that is still a bullish indication. But we tried to get over 75 right here, right? This was our swing high back in July. And then the end of July high here and a lower high here. So we have a little bit of a stall out, I would say, on the breadth. And I think that be worth, let's duplicate this. And just to note this little change right here. Yeah. Over 50% on the 200. Not too interesting. I'm more interested in the 50. It's a lot quicker right now. And this is interesting to me that it couldn't make even match the highs there at 75. So, yeah, nothing saying, oh gosh, big warning sign, but definitely interesting. New highs versus new lows, still over the zero line, but pretty much stagnant there. We've been running pretty much sideways, on the markets, so this isn't a surprise either. Taking a look at junk bonds right here. All right, starting to roll over a little bit. But in lockstep, I wouldn't say any divergence there that's too crazy. Let's take a look at the bonds really quick. TLT has just not really done anything. But the shorter end here, the bonds, definitely pulling up. You can see the 7-year breaking up and over this big area. And that is interesting to me until we see the all-time highs again on the 7-year. This is also interesting to me. 7 years breaking out. So it looks like this the shorter duration bonds getting a move while the shorter end of the curve not really participating. And this is interesting here. I wonder if we're going to see TNX up. I think we would. This reclaiming over the 50-period moving average. I would say this is another warning sign right here. With the price ratio of the short, the 7-year versus the 30-year. Let's look at what TNX is doing. Slight bounce, but nothing really to talk about there. Oh, dollar tried to get up and over 97, 98, couldn't hold. Still looking weak. We'll watch, hold 42, 4.2 here. And we'll see about getting back over 43 on the yields. Federal funds rate probably down a little bit. Okay, LQD, a little pullback, but nothing too crazy here. This is interesting to me, breaking over the 50. We were looking at this also earlier on the bonds. I would say these two here, a little bearish warning signs. We'll see. This divergence in the spreads is interesting, but we want to see this divergence clear itself up sooner than later. The longer that this divergence holds out, I would say the more chance of potential volatility coming into the markets. No concern here, no concern, but definitely in these two, getting back over their 50-period moving average. So some bearish points there. Let's see if the skew has come up at all. A little bit. Let's see if it gets over 154, 155. And I'm going to take a look at oil volatility because this has been interesting to me, hanging out down by the lows here. So I'm wondering if we do see a move in oil soon, as we hang out in the 30s. Some volatility in oil potentially coming in to put some pressure on the markets overall. Alright, I think that's everything I wanted to go over for this week's video. I really appreciate you guys taking the time and joining me. I will post those NQ levels, as I mentioned. I'm not sure why they did not save. Thanks again, like I said, so much for joining me. Don't forget to subscribe to the channel. And remember, a prepared trader is a profitable trader. So plan your trades, trade your plan. I'm wishing everybody a great month of September, and I will see you guys out there in the market. Take care.